Price cuts are on the rise. People admit that they would not be able to afford their home if they were buying today. What is going on with the real estate market? We're going to talk all about that today on our Tuesday market update. So let's start right here. Number of price changes per week. So this is from the Cantafford report, and they are reporting that we are seeing an increase in price changes per week, more especially than we typically see this time of year. So usually we start to see price cuts going down because this is our busiest season when we start to see more contracts on homes, more buyer demand out there. And so sellers aren't really cutting their price because things are selling quicker. But instead, since February, we've started to see this uptick in price cuts on a weekly basis. Now, you can see this whole section here. This is kind of an outlier. This was April of 2022 through the summer and into October of 2022. Mainly that's when iBuyers had their oversupply and they were just slashing their prices because interest rates went up and demand went down. So this is not typical to see, but you can see in April of 2023, we started to see price cuts decrease. And if you look previously, April of 2021, price cuts were low as well. April of 2020, price cuts started to go down here too. So this is a little bit of a different trend than what we're used to this time of year. We're seeing these price cuts increase, and the latest being about 2,200 price cuts during that week. If we look at the median amount of price changes, that's $10,000. So, generally speaking, that median change, if a seller is going to cut their list price, is going to be by $10,000. Now, I will say all of this is list prices. So this is not sales prices. These aren't, our sold prices coming down. This is just the listing price. So there's a couple things to think about here. Obviously, sellers are reducing prices. Is it because demand is low, or is it because they started far too high? It's probably a little bit of both, but just something to consider. And remember, these are just the listing prices, not the sales prices, but either way, we are starting to see this trend in a different direction. The Cantafford report is saying that this is the highest number of price changes that we've seen, obviously outside of this outlier in 2022, since the year 2020. And we have seen about 56% of listings take a price cut over the last 4 weeks. So buyers, keep an eye out because listings are cutting their price. At least 56% of them have over the last month. Now, what am I talking about here where people can't afford their homes? This new Redfin survey says nearly 40% of homeowners couldn't afford their home if they were to buy it today. And I'll ask you guys the same question. Put it in the comments. If you were to buy your home today, would you be able to afford it with the way prices are and the way interest rates are? I thought about it for my home, and I don't think it'd be very pretty, sadly. So it says 2 in 5 homeowners don't think they could afford to buy their home today. I think this is kind of interesting. Definitely could afford it, probably could afford it, might or might not be able to afford it. It's just not very clear. Definitely could not afford it. 18% probably could not afford it. 19%. So, there's a little bit of a span there. They only surveyed 3,000 residents, so it wasn't a huge sample size. However, 3 in 5 or 59% of homeowners who answered this question have lived in their home for at least 10 years, and another 21% have lived in their home for at least 5 years. So most of these respondents saw home price increases since they originally purchased, and their sale price has doubled in the last 10 years or shot up 50% in the last 5 years alone. And so as it goes now, if you were to look at what the price of your home would be and what that interest rate looks like, these homeowners are saying they may not be able to afford it, or at least 2 in 5 homeowners are saying that. That's not a good place to be, because when you have to sell your house, you want to make sure that the majority of buyers out there can actually afford your home. Otherwise, you're not going to sell it. You're not going to sell it for the price that you want or need to sell it for. So this is not surprising news, but it's certainly not the best news to hear. Now, I've talked a little bit over the last few months about 2 different real estate markets, the new home market and the resale market. And those are continuing to be divergent and behaving in different ways. So new home sales inch higher despite 7% mortgage rates. There's more opportunity, economist says. Now, this, of course, is national, not specific to Phoenix, but we are going to look at some Phoenix numbers. Home buyers are paying attention to new construction due to more supply and incentives. About 693,000 new single-family homes were sold in March, up 8.3% from a year ago. The median sales price was $430,700. And so this is talking about how these new homes are more affordable for buyers, even if the prices seem to be a little bit higher. The incentives that builders are offering allows buyers to get into them a bit easier, which is why we're seeing more new home sales than resales. New single-family homes sold in March up 8.3% from a year ago, and meanwhile, we're seeing resale homes dropped by 3.7% from March of 2023. That's according to the National Association of Realtors. So I also saw this article, existing home sales drop in March as high rates stun home buyers. Basically the same thing. This is saying existing home sales retreated 4.3% between February to March to a seasonally adjusted annual rate of 4.19 million. That's according to the National Association of Realtors. So, and it also says, as the previous article said, the sales were down 3.7% from March of 2023. So with a resale home, oftentimes sellers are reaching for the stars for their home price. They also are less likely to give some sort of credit to a buyer in order to buy down their interest rate or use that credit for their closing costs, whereas new homes are much more flexible with that. The incentives that some of these builders are giving are crazy. Obviously, it's baked in other places. Nothing is free, but if you're able to get 3% credit to buy down your interest rate, or even more than that in some cases, places up to 4, maybe even 6%, depending on the loan program, the builder. It makes a really big difference on what your monthly payment looks like, and you're getting a brand new home. So that has been very enticing to home buyers, much more so than resale homes. So is this true for Phoenix? Well, let's check it out because we are seeing some similar trends here. Now, sales per month have not gone down between February and March, as that article states. This is looking specifically at resale homes here in the Phoenix metro area. So we aren't seeing that big drop off between February and March, as that article states here in Phoenix, but we can see, and I showed this last week, I believe, that the number of resale sales per month is way down compared to previous years. Now, as we look at what's going on with new home sales in Phoenix, year to date, we're at about 3,351, which is the most new home sales we've seen out of any of these past years. The closest number of new home sales was in 2020 with 3,345. So, basically the same. And again, this is year to date, but that's tapered off since, and now we've totally bounced back up this year, seeing these new home sales go pretty quickly. Now, if you're in the Phoenix area and you've been considering new construction, check the description below because I have a link that can help you find some new construction homes in the area. And bottom line, we're kind of following that same trend. The number of resale homes in the Phoenix area is lower than normal, and the number of new home sales is increasing. So we'll have to see if that continues. This week, we've got some big economic news coming out. The Fed meets. We'll have the jobs report on Friday. So a lot could change this week with the economy based on what happens with those reports and what the commentary is from the Fed. So keep an eye out and make sure you're checking in with your lender as it relates to mortgage rates if you're kind of at that point there where you're making offers or potentially locking in your mortgage rate. Now, markets are anticipating that the central bank is going to be holding rates steady this week. Last time we heard from Jerome Powell, he was saying that inflation is taking longer than expected to fall to their 2% target. And the data on price increases came in above expectations. Most recently, we did get the PCE, and it rose 2.8% over the prior year in March, which was above estimates for 2.7% and unchanged from the annual increase seen in February. And so after that, investors were pricing in a 33% chance that the Fed cuts rates in July, down from an 83% chance a month ago. Basically, we're not expecting much change at all. And if they will be cutting rates, it's not going to be until the fall. That is mostly what everyone is expecting. Now, like I said, the jobs report that's going to come out on Friday. They are expected to show 250,000 non-farm payroll jobs added to the U.S. economy, and unemployment holding steady at 3.8%. So we'll see if the labor market holds to that, or if it is higher or lower. All of that could affect rates as well. So just keep that in mind. Here's the latest from the end of last week with mortgage rates. We did see increases last week, although it wasn't quite as dramatic as it's been the past few weeks. It says mortgage rates recover some of Thursday's weakness after Friday's economic data. Bottom line, with mortgage rates, they went up a little bit last week, not as bad as they had been in previous weeks, but we did see some increases in mortgage rates last week. So, as I always say, if you're a buyer, make sure you check in with your lender and get a better idea of what's going on with your interest rate if that is super important to you as you're house hunting. Now, if you're new here, I do these market updates every Tuesday talking about what's going on in Phoenix and the economy as a whole as much as possible. So if any of this is interesting to you, make sure you hit that like button and consider subscribing. Now, I did have a comment last week that someone wanted to see inventory charts. So let's take a look at what's going on in Phoenix. This is months of supply, and I'm going to show you the active listings as well. But months of supply is always a good thing to look at as well, because what this means is if we had no new homes come on the market, we would run out of homes for sale in 2.5 months or whatever the reading is. Right now we're at 2.5 months. So inventory is really low. Generally, 6 months of inventory is a balanced market, but according to the Cantafford report, Phoenix behaves a little bit differently. We're in a balanced market, I think closer to that 4-month of inventory range. So, this is low, but it is creeping up, as you can see, just over the last week. That's not a big change. Inventory has only really gone down, or months of inventory, since we started this year, but it is higher than all of these previous years. Now, we'll see the same thing when we look at active listings. Our active listings are higher than all of these previous years as well. We're sitting at about 17,500-ish in terms of active listings on the market. This is not including anything that's under contract or contingent right now. This is just what is actually actively listed. Now, we've been kind of increasing as the year has started, but holding pretty steady. There hasn't been a whole lot of big changes as far as active listings are concerned. Now, you may notice that the months of supply is going down while the active listings is kind of creeping up. Months of supply is taking into consideration the absorption rate, so how quickly homes are also going off the market, which is different than just the number of active listings that are out there. Now, let's look at what's going on with the CMI. As I always talk about every week, we're sitting at 110.7. If you're new here, the Cantafford report has this Cantafford market index. Anything between 90 to 110 is considered a balanced market, and anything over 110 is a seller's market. So we're moving into balance, and this has just been going down ever so slightly. Our demand is at 79.6, so about 21% below normal, and supply 71.9, so we're about 29% below normal for supply. There really hasn't been a whole lot of movement in the CMI lately. It hasn't been super exciting. We've just been kind of slowly trending towards a balanced market. Now, depending on where you're at in the valley, of course, each major city has a different CMI because of the demand and the supply in that city. So Buckeye, for example, is considered a buyer's market, and that's largely because they have so much new construction that their supply of homes really outweighs the demand in the area. And then a city like Chandler has very, very little new construction. And so this is really just based on resale homes that are available in the area, as well as, the demand for homes in Chandler, which is a desirable area to live for a lot of different reasons. The average change of the CMI for all of these cities over the last month was 1.4%, which is up 1.1% from last week, which is a trend showing that we're gaining a little bit of strength towards a seller's market with all of these cities. Overall, there are 10 cities that have shown an increase in their CMI over the last month. 7 have declined in their CMI over the last month. The Cromford report is calling out that buyers have strong negotiating power in a few of these cities here: Queen Creek, Maricopa, and Buckeye. So buyers out there, if you're looking in that area, just know you may have the ability to negotiate a bit more aggressively with concessions or lower sales price and that kind of thing. Also, remember that price cut chart. You may start to see more price cuts in these areas as well. In the description below, I have a link to all of my buyer and seller resources, whether that's an instant home value or searching the MLS, a few other free downloads in there too. So make sure to check that out. And I will see you guys next week for my next real estate market update.